Welcome, Chemistry. How you doing today? Good to see you again for another live stream. So it's been a few days since the last one. So I thought I'd jump on and see what's happening in the markets, but also I'm going to be showing you a couple of things today that are pretty essential. So make room for that. Just waiting for some more people to arrive. Training at the park, that's really good stuff. Excellent. I'm also getting back into the gym. Second week now and loving it, every bit of it. Really just preparing for what's ahead. So very good. Good to hear it. So I'll just switch on my global world clock just to see where we're at. It's probably really early for some people. Some people may not attend, but that's fine. They can always catch it later. So we just want to get things back on the road once again and talk about the waves. So I've had a few days to think about where I want to take the YouTube channel, in which direction. So we've been primarily focused on XLM up until now, but I feel like there's more to the waves than just XLM. Well, I've known that for a long time now, but now that we have a firm planting on those waves, which I'll cover as well in this live stream, I just want to also cover interest rates. That's one thing that I haven't really touched on much lately because it's been a work in progress along with many other things, and we're trying to build a bigger picture here, and I think that's very important. Welcome, Joshua. How you doing? Good to see you. Thank you for joining. So in effect, the bond yield is one of the most interesting charts that I've ever looked at, simply because it's such a long-term chart. So my members will know about that chart because it's on the website, which, it's part of something that I need people to understand about the waves, is that they're long-term and short-term. It doesn't matter what degree you look at it, the waves are there. So it's absolutely critical that we start to understand that as a whole, because a lot of people, they don't really see the bigger picture. They just see what's in front of them, almost like tunnel vision. Welcome, Johnny P. No, we haven't hit those targets yet, and we're not in a hurry. We want to be prepared for what's ahead. And tonight here in Melbourne, Australia, we're ahead of most of the world in terms of time zone. I just want to talk a little bit about what's ahead, so then we can start to understand the bigger picture as to why these things are happening and why they're happening now. So one of the things I also wanted to mention is that it doesn't matter how much of these labelings I show, only Ariaswave members will really understand this stuff. because there's a lot more to it than just some labels on a chart, right? It's part of a bigger picture. It's a huge fractal pattern, and we're only in a minuscule time frame, our lives. We can look at chart data for our whole lifetime, and it's a minuscule time frame compared to how long this thing has been going for. We're actually pretty irrelevant in the grand scheme of things, but don't let that get you down, all right? Because there's so much more ahead that we can take advantage of during our lifetime that will make it all better. So, Black Swan event. Yes, well, I've been talking about the Black Swan event for a long time, but you see, the problem is when most people talk about something, it usually means it's not going to happen yet. And most of the time, 99% of people are wrong. So that's part of what I have planned for tonight or this live stream, is to sort of make you understand or help you understand. I'm not going to make you do anything. I'm going to help you understand why we're seeing this happen right now, this type of what some people call an inflationary shock is actually just that, an inflationary shock. But what I'm going to talk about tonight, it paints a picture for hyperinflation coming in the next couple of years. And we're not there yet. And that's part of the reason why I want to show it to you so you can see it ahead of time. It's something that I've been working on for a while now, but sort of whenever I go silent for a little while, it just means that I'm thinking about stuff. I'm thinking about waves. I'm thinking about, because everything's visual. It's in my mind. It's been implanted like a chip, not like an Elon Musk chip, but just like an Ariaswave chip, where basically I sift through waves and I think about every possible scenario. And I'll explain to you why it's been so difficult to make this sort of analysis possible. But at the same time, it's the joy of the journey. It's the joy of the journey. Basically, I had it right most of the way, actually practically all of the way, except where we are now. But now it's become clearer as to what's left in the bond yields, which is a very important indicator as to what's happening in the global markets, right? And this is since 1981, especially since 1981, where interest rates topped at around 20%, anywhere from 15 to 20%, depending which country you're talking about. Could have been less or more, I don't know. But in this case, I'm going to be looking at the US 10-year Treasury note yield. So, welcome, Yasin. I think we have a first bull trap. It will go up to 80 cents and then bam, back to 28 cents. Okay. That's a very interesting insight. I would like to see your analysis to back that up. Don't know what analysis you're using there. There's no way you can know what a D wave is going to do at this point. But also we are needing to look at the bigger picture as well. So, and that's what I'm here to do today. So I want to try and explain to you why this trend to the upside hasn't quite ended yet. And I want to try and understand what's going to lead to the end of it. And I have a pretty good idea as to what it is. So I will get to that right now. All right. So I'm going to share my screen. Okay, so here's the 10-year bond yield. Now, this is a very good chart. This is a very, very interesting chart. Now, this one required a lot of knowledge of the larger picture. which my members have access to. And it is part of a B wave, which started quite some time ago. It was quite a while ago. I think it was 1440 AD, right? Welcome, Corda. Good to see you. So this chart is, the chart on the members page, it goes back to 1100 AD, okay? So it's part of some kind of corrective pattern within a corrective pattern, which I don't know what the larger degree is. All I know is that I see Ariaswave in there, and we're in some kind of zigzag pattern, which could be a B wave. Sorry, A wave, right? It could be an A wave. There's nothing else it could be, actually, because this pattern, the way that it's formed since then, can only be one thing. If you understand what Ariaswave is, you will understand what I'm talking about. If you don't understand Ariaswave, then there's no way for you to understand what I mean by that. So the whole pattern since then is, it has a 5-wave move down, and then it has the beginning of Ariaswave in a A-B pattern. And this is basically the C wave of the B wave, right? Since 1981, right? So what we're seeing here is actually a very interesting pattern indeed. It is, in my opinion, it's a very rare pattern, but nonetheless, I'm going to try and explain it. So this is to me, this is a type 2 weak or ending pattern, ending diagonal, right? So the reason I call it that is because it's a C wave. So it's a 5-wave move, but it's not part of a B wave in brackets. So therefore, the first wave looks to me like a 5-wave move. Wave 2 was extremely sharp, right? Wave 3 was a 5-wave move. So therefore, it's interesting to see an ending diagonal. It's a type 1 ending diagonal in wave 5 of a type 2 ending diagonal in wave C of brackets. So it's actually not very easy to comprehend, but once you understand that ending diagonal can happen in a 5-wave move that's weak, you start to understand that, okay, we have the alternation in play, right, in these spots. And no rule has been broken at all. So to me, that's so intriguing, because we are seeing this hyper choppy pattern, and it's just intriguing. So that's what I'll be covering for a moment. So also, I want to start by saying, when wave 4 ended here, because we put the line, we're starting to see strength in the market, right? Because any time that a move to the downside becomes weak, right? Now I'm going to segue with this into XLM, okay? And then I'm going to head over to USD. So it's important to note that when a pattern becomes this choppy, there's strength, underlying strength in the market. So in this case, interest rates want to break out to the upside, okay? Now, that to me is pretty interesting, considering what we saw after that wave 4 ended. We saw wave 1, wave 2 was expanded, okay? Now that's a zigzag wave 1. That's why I say it's a type 1 ending diagonal. And then we have wave 3 as a zigzag, which happened, from 2018 right down to March 2020. Also very interesting as well. Okay. Now, it's interesting also to note that each C wave of these zigzags to the downside, for example, wave one, was meaningful to the US dollar in some way. Okay. So you can see that here in 2008, we had a C wave to the downside around the GFC, or potentially related to the GFC around that time, or the whole zigzag was down around that time. And then we had a wave two, which was, basically sideways until 2018. And then we had a wave three, which was a zigzag. And the pattern that we're seeing now is an A wave in a wave four. Now, because wave two was sideways and drawn out, I would not be surprised if wave four would be quick and, short and sharp. But that doesn't mean it's going to be finishing up just yet, right? So to me, what I think is going to happen is that this wave four will end once the US dollar finally makes its low. Sorry, I reckon this whole pattern will end since 81 once the US dollar makes its low. Okay, its final low, right? So one thing I didn't put in here is, hang on a sec. Okay, it's a wave C. So we're going to see a 4 and a 5. And once we see, like, also the US dollar made a high, an important high right before March 2020. Same thing happened. It went down here. So I think also the last low, the last move down will happen around the same time. So I think that's valuable information, because that to me is such an important thing, and I explain it to you in a sec. So just because interest rates go up, it doesn't mean that the market crashes. We've seen it before. If you go back to the previous move up, which this chart unfortunately doesn't give us the privilege of doing, but if you go to any historical chart of the bond yield, which I do have it on my members page, but if you manage to find it, you will see that there was a move up in the bond yield since the early 1900s, and the market did not collapse due to it. Okay, so there's nothing to say that high interest rates is going to collapse anything. And that's why I think it's hyperinflation, because of money velocity. Yeah, that's right. It's in the minus, right? And it doesn't even matter. You know why? Tips market, right? The way that they are manipulating the market is literally like putting a beach ball, like basically 6 feet under the water, right? Trying to kill it. But we all know what's going to happen when that pressure builds up. And whenever it does turn around, it'll literally create what I believe will be a massive C wave surge to the highs, and beyond the highs, potentially even. Anyway, I don't want to say much about that because we haven't seen it yet. Obviously, I'm just giving you my ideas. And because of the way they buy all the debt, they keep buying all the debt, right? So if you know anything about their, World Economic Forum agendas and all this stuff, all I can see is that they will keep buying the dip. They'll buy everything, right? They'll literally vacuum up every bit of debt that you can't handle or you can't afford. So basically, this is like, it's like it's like a bull trap, but it's like a debt trap, right? And you could easily see how they've done this since 2008. If you've seen certain documentaries and you've seen how they have gone out of their way to increase the amount of debt people take on, ninja loans, and giving basically people with no income, no job, even senior citizens, just give them a debt, a loan to buy a house. And this was especially prevalent around, the GFC or just before it. So it's something that, was, I don't want to say it, but it was kind of like done on purpose, right? So to me, this is like they're trying to suppress this market, and they're having a hard time. I mean, look at it. It looks like it's literally an L shape trying to go up, but it's not. Not yet. They're going to keep trying. And mind you, that's going to cost them a lot of money, right? It costs them $1 trillion a day just to keep the repo market going. And they think that that's going to actually increase over the coming years, right? To 2 trillion, 3 trillion per day, right? So I don't know if you know about what happened to the repo market in 2018, I think it was. It literally shot up 10%, which basically collapsed the repo market, and they had to come in with emergency measures. And then mysteriously, the year after that, there was a pandemic. Gave them access to more unlimited money printing. Okay, very interesting. Just to note, these can or may not be related. I don't know. I'm not a financial advisor. I'm just giving you my knowledge on the waves and putting 2 and 2 together, connecting the dots. That's all. Okay, you can go watch Gregory Mannarino if you want to get the insights on what they're doing and even have names called out. But here, I'm just trying to indicate to you what the waves are telling me, right? So we have here a trend line broken and then somehow smashed back down, and then will be probably smashed back down again. Like, hey, they're just trying to monkey hammer this market, this bond yield. They don't want it to go up. You can see it. It's clear as day. It wants to go up, but they're monkey hammering it down. Like, nope, you ain't going nowhere. Sorry, we can't have that, right? It will literally collapse the system at this point. It'll be the wrong time. Why is that? Well, they need to have full control of the entire economy, the whole entire money supply, everything. They need to have full control, digital payments, tracking every dollar, stimulus, unlimited stimulus capabilities, right? Okay, so moving on from that, I think I've said enough on that one, because, once you understand the waves, it becomes pretty clear. Okay, so to understand this kind of pattern is very important. Okay, so now this is there's no log scale on this. You have to turn off the log for this, just like oil. You have to turn off the log scale on that. So Oil is another one that is very interesting, and it's very hard to understand it. But I'm also working on an updated idea for that one, simply because it's such a complex pattern. But it's sort of starting to come around, and the funny thing is that practice makes perfect with this sort of stuff. I like how you said bow and arrow, actually, because when you look at this thing, it's like a bow and arrow. It looks like a bow and arrow, and the price action is the bow. The trend line is like the part that you hold, and the arrow will literally be the price going in the opposite direction once this thing turns. So that's a good one. Well, that's the whole point, Johnny. That's the whole point. So welcome, Micro S. It is deep, right? And it really just spells a lot about what's going on, because, you know, when you think about the level of debt that people have these days, right? Such a move like that would cripple the middle class completely. Oh, haven't I heard of that before? That narrative, that agenda? No, I haven't. It might just be a good reason for them to need to buy everything that can't be afforded by the everyday person in order to keep this thing going. So therefore, like I said before, there is no reason for the market to crash if interest rates go up. Okay. Now, the other thing I wanted to mention is you'll notice that the US dollar seems to go up every time this thing makes a major move down. But as you know, according to my US dollar analysis, the US dollar is about to top. Okay. Now, it hasn't topped yet, and that's part of my overall analysis, and it fits in perfectly with the bond yield. Okay, so we're using multiple charts to determine what's coming next. So another thing I need to touch on now is the US dollar. Okay, it's important that we understand everything. Now, I haven't gone to the effort of labeling this completely, because, you know, if you I've done that many times already. To me, this is all you need to see at this point. Okay. We don't have we haven't even seen a wave 3 yet for the US dollar. So all I've seen here is a wave 1 down. You know, this is a type 1 type 1 weak wave E. Okay. And so far, I have not seen wave 3 yet, but I can see that B wave hasn't even completed. Okay, wave B in brackets hasn't even completed yet. So isn't that interesting how B wave is still in progress? We haven't even seen a completed D wave of the B wave yet, right? So once we get that B wave completed, we might see the end of wave 3. Now, as I've mentioned before, that's good news, because, you know, we're going long on cryptos, right? So we need to understand where will it come the point where we get out for a little while whilst this thing performs a fatality on everything, right? This is the kind of thing that to me is the most critical part of what I do here. It's paramount to everything that I'm trying to do on not only this channel, Ariaswave in general, is to understand how far this is going to go before we need to consider making an escape, run for the exit, run into the USDC or whatever it is you choose to stable your gains, right? It's totally interesting to see what this pattern is doing. This is critical, absolutely critical, same as the bond yield, right? And it paints a picture that is literally bullish for XLM and everything else, right? Until we see a completed pattern, right? A completed wave E, and it's probably halfway. As crazy as that may seem. Now, the thing that worries me and bothers me a little bit, just a little bit, is that we're seeing a similar pattern now in XLM. So I can give you an example, and this is really cool, right? I can give you an example of the level of detail that I can go into. Welcome back, Flashback. Good to see you. The level of detail that I go to understand the waves, right? Now, I'm not going to go in depth into it, but I'm just going to merely display it so you can see it. Now, it's a pretty important time to bring this up because this is a larger E wave than the one we're seeing in XLM, but they're all the same, right? So this is what people need to understand about the waves, is that they're fractal patterns. They occur at every degree of trend. It's only up to you to identify the degree that you're looking at. Is it a long term? Is it a short term? Is it a midterm? Is it a semi-midterm? Whatever it is, right? You can see the waves. You know what to expect. You can just rely on that, and you can use a bunch of charts and line them all up in a straight line. Get your ducks in line, and then use your logic. Right? This is why I do these videos, because those that really know Ariaswave will understand exactly what I'm talking about. Whereas those that don't, they may have question marks. And I'm only going to cover what's directly in front of us, right? Ariaswave will give you a rear view mirror, sure. But Ariaswave will allow you to see around corners, okay? Not my ideas that I present to you here will allow you to see directly in front of you, but Ariaswave will allow you to see around the corner, okay? So that's an interesting way to put it, because that's exactly what it's for, and that's why it's awesome, and that's why I made it, because I needed a firm ground to stand on in order to make my analysis possible, because I was not going to waste my time using indicators, which are subjective tools, but rather I needed some kind of way to understand patterns so then I can feel like my time is not being wasted using subjective matter over the long term, which is why I came across this pattern. I invested my time and energy into it, and it's fruitful because it gives you that leg to stand on. It gives you a solid foundation to understand everything that's going on in the waves. So now let me switch to XLM, because this is where it starts to get pretty real. Okay, so let's just quickly go to the long-term chart, just so we can, for those that still have question marks in their mind about this move, okay? I'm now going to get rid of the question mark and I'm going to lay it out for you, okay? We're expecting a D wave and an E wave, okay? So I'm just going to clear up this chart a little bit because we've got too much stuff in the way here that's not really that necessary at this point in time. So basically what we're looking at here is we're looking at a long-term 5-wave move to the upside, okay? So wave 1 occurred, or the end of wave 1 happened around the end of 2017, right, in cryptos. Now, if you want to know about other markets, that's a different story. Let's stick to crypto scene. Let's specifically stick to XLM. Bitcoin is basically the same thing, right? So what we're looking for is the end of wave 2, okay? But that's not going to come without some pain and some gain, or some gain and some pain, right? So to me, it's not about trying to pick how high the D wave is going to go. And I'll explain to you why in just a second, right? I'll explain it to you with an example of a D wave at the small degree, because like I said before, all the fractal patterns happen the same. Doesn't matter what the degree of trend is, right? You just got to take a look at this B wave here to see how a zigzag can expand to the upside, okay? Now, if you think that that won't happen again, all I can say is that you are mistaken. We are in a time right now where that's possible. Well, yes, he's telling people all this, he's giving away all these pieces of, lovely little insights about whatever he's thinking in a very cryptic way. But the truth is that everything is going up until they pull the plug, or until the USD shows the strength. Now, it's the chicken or the egg. Is it because they pulled the plug, or is it because this is actually driven by human psychology and they are merely like the rudder, right? They're the rudder, but they can only try and steer it in one direction. But if a tidal wave comes, well, their little boat ain't going to do nothing, right? So at the end of the day, they're navigating these markets and pulling all these levers, trying to stimulate all these ways. But what happens when Mother Nature takes hold and, changes your course for a little while, right? It's the best way that I can explain it right now. So the waves merely give us the guide, the navigation system, to understand what happened and what's going to happen. And it's incredibly accurate, especially once you've seen the ABC, okay? Because then you've only got two waves left, and you can use a whole host of charts and clues and knowledge to take you the rest of the way to where you're going. And in this particular case, it's going to be one of those, it's going to be a bait and switch at a massive level, because the D wave. That's all I can say to you, because the D wave. And I'll go to the small time frame now, and I'll point something out to you which will help you understand what I just said. So let's go to the 1 hour chart for a second. Okay. Now, yes, you can see a bunch of squiggles on there, but the point is this. The C wave bottomed down here on the 22nd of June, or around that time. And we saw a bounce. Now, I saw a complete C wave here. Okay. That started off pretty sharp, and it ended up looking pretty weak. Doesn't that remind you of the bond yield chart? That's a good point, Michael. That's a good point. I like where you're going with this. Show me some more. Okay. So we had what I call a type 1 weak wave C, right? So why would it get weaker as it went down? Because it's got strength. Do I need to say that again? It's got strength. Otherwise, it would just continue going down, or it would have at least shown a correction and it would have already dropped. It would have kept going. But hang on a minute, roll back. The US dollar isn't going any higher from here. So how can it do that? Right. So, okay, so you know what a type 1 weak wave C looks like. Is it any different than a type 1 weak wave E? No, it's not. That's right. That's the whole point. Even though it may seem complicated at first, it's actually quite simple once you understand how it all works, once you understand all the waves and all the subdivisions. It can only be one type of pattern, right, out of 3. Okay, so it's not like there's a myriad of millions of different possibilities. No, every wave's unique, but that doesn't mean that there's a myriad of possibilities No, there's only 3 variations, and you just got to try and pick out the one that is going on using your logical mind. If you need to train that brain, basically. So now we just zoom in a little bit more to the 15-minute chart. All right, so you can see we have the same pattern all over again, right? There's wave 1. Oh, there's an A, B, C. Oh my God, what did we just see now? A C. Okay, great. Now use your visualization skills to try and picture a wave D. I don't need to. I've got one right here. Okay, so let's have a closer look at the D wave. Okay, so the first part of the D wave was here, A, and C was up here. Oh my God, so what happened in between? It's called an expanded correction. It's expanded type 2 zigzag. You get me? Can you see where I'm going with this? Okay. We can't know what kind of zigzag we're going to see until we see it, but we can track it along the way and see how far it goes. Okay. So you need to get that into your mind before you go asking these questions. What is the target? Do not ask me what is the target, because I've just literally explained to you that we're in a wave 2. So therefore, the target can be a lot higher than my previous targets, a lot higher, right? But during the time of which this is unfolding, you will probably lose, maybe you might lose interest and lose patience, but that's just a fool's game. Why would you lose patience and interest when this is literally telling you how it's going to be, right? Or how it may be, or one of the variances of. Now, this is also really cool. Oops, hang on, not that line. The E wave is still unfolding exactly the way I said. Now, I know that you can only see partial counts here, but I'll turn them on for you so you can see them. Right there. Okay. Now, this is the same pattern as the C wave that we just saw happen on the larger degree, except this one is even weaker. We have 1 zigzag, 2 very small, same as the bond yield chart, remember, except this one's a type 1, not a type 2. And this one's just straight zigzags, right? So 1, 2, 3, right? So 2 small, 4 is expanded, or, to the sideways. And then 5 hasn't finished yet, right? It has not finished. Okay, it's still going. We're seeing like A, B, C, D, E potentially, or B wave still in progress. To me, I think potentially it's A, B, C, D, E, but it's such a small degree that I don't want to take too many guesses right now, but it's looking pretty stretched out if you ask me. So if this thing goes any further, I think it'll break an axle or something, but it's just definitely, in my opinion, it's definitely going to wedge out here as it keeps moving down towards this area. It's definitely going to produce a lot of, it's going to consolidate and coil up into an apex, and then it's just going to smash out to the upside in wave 3. Okay. So it's the same pattern, and I'm showing you how detailed the analysis can be. And just so you get an understanding of how I see things and how Ariaswave helps you visualize things. That's all I use. I'm not trying to figure out the waves here, how they work. I already know how they work. The thing is to try and understand how they work at the small degree, and then label it and then show people. And then wait for the evidence to show itself, right? Wait for the evidence to show its teeth, because it works. Right, that's all I do. I literally only just identify the waves using Ariaswave and then show it to you guys. That's all I do. Okay, so you can learn it. You can be better than me. That's fine. No problem there. But you have to understand that I'm bringing you this knowledge so you can use it for your advantage. At least use it for your peace of mind when you're unsure about what's going on in the markets, right? So this is only the beginning for Ariaswave as a method of understanding what's going on, right? The navigation system. Okay, so I believe once we see that white dotted line hit in 5 waves that looks similar to this, okay, and then a break of that magenta line up here at 27 cents, that's it. This whole move is completed, and the confirmation will come once we break the highs up here, like that one, 29 cents, yeah, 29, yeah, and change. That's when I believe this wave 2 will be over and we're going to see more upside. Now, do I need to go to Bitcoin to look to confirm that? Not really, because they all trend the same. If you can identify the correct pattern on one market, most likely you've got them all down. Now, which one's going to give you better percentage gains? Well, do your research. Look at the BTC cross pairs with your crypto and figure it out, right? But like I said to you, if this is only wave 2 and it's still in progress long term, right? Like, let's go back to the daily chart, right? And I explained to you already that that's a small degree. That's part of a first leg up of a D wave, and then you don't know how that D wave is going to expand, right? You know, it's just, you can't know for sure how it's going to go, but I can see using my optics, using my logic and my knowledge that it's going up, right? But once we get to the end of D wave, to me, what's going to happen is it's going to line up with that US dollar move to the upside, right? And it's going to crash like this, probably most likely back down to retest the end of wave 1, right? Or a little bit lower, or maybe just above it. I don't know. But this is where it's going to be interesting, because if you can take profit at the end of wave D, put it in a stable coin, and then wait for the E wave to, basically end, and you're tracking its every move the way I've just shown you how, at a smaller degree, the same thing. Identify its pattern, and then just hop back into that market again with a profit, and you've got more XLM now. What comes later is going to blow you away because of hyperinflation and what I see coming. And I've just literally painted the picture using the bond yield chart, the US dollar chart, and XLM, right? All cryptos trend together. I don't need to go to Bitcoin. I could, but XLM is going to perform better in the long run, percentage-wise. So why do I care? I don't care. And we all know that we're all going to digital payments, right? You just go down to your local supermarket or, retailer, and they're, they've got machines that only accept digital payments. They're calling them digital payments now. They're not calling them card, because card is redundant now, because we don't just use cards anymore. We use phones, NFC, tap, whatever. But the point is that they're calling it digital payments now. I don't know. I just think that's interesting. That's just my opinion. $160, to be honest with you, I think 160 is it's quite low. It's quite low for what I believe is coming. Hyperinflation, okay? Hyperinflation. 160 in hyperinflation is nothing, okay? Especially when you're talking about exponential charts, okay? So just think about this for a second, right? Now, this is not the start of wave one, okay? There's actually, if you go, let's just switch to the STR USDT chart for a moment, right? Okay. Now, wave one, I don't know what that's doing there. Yeah, this once again has put in labels that I didn't. So basically, if you think about it this way, right? If this is wave one here, right? And this is wave two, why would wave three be shorter than wave one? Right? Why would it be shorter? It'd be much longer than wave one, okay? This is why you need to be very careful with your targets, okay? Be very careful with your targets. Don't go making targets when it's nearly impossible to judge how far a wave three will go, okay? Don't do it. It's not important. It's not necessary. Okay, just ignore that. Okay, I'm not setting expectations too high at this point. I just want you to understand that I'll be tracking this, and we're going to track it, and we're going to understand it, and we're going to know what it's at. If D-Wave goes to $100, fine. But you have to know to get out at $100 before the E-Wave. It doesn't matter, right? If you don't know that, you're still going to have the same amount after the crash. So who cares about that, right? It doesn't even matter. The point is you want to take it one step at a time. Now, if you're a hodler, I'm pretty sure that you'd be kicking yourself if you didn't actually take the profits at the top of D-Wave and then put them back in at the end of wave two. I'm pretty sure you'd be kicking yourself, right? The program would have paid itself over like quite a few times, and you would be kicking yourself and you'd still have no idea what's going on, okay? Like I said, Johnny, hyperinflation, okay? Even Michael Burry says it. Even the Fed is alluding to transitory hyperinflation. They're not saying when, right? At the moment, we're having an inflation shock, okay? But it's transitory, okay? That's the Fed's way of saying that it's temporary. It won't be here for long. But I don't know what to say to you. Apparently, nobody can know what's happening in the future. So let's just play the game along with them, along with everybody else who says you can't know the future. But I know the start of a 5-wave move when I see one. So using all the knowledge that we have accumulated in Ariaswave, I'm sorry, but I can't buy that because we all know that they can't stop printing money. And if they ever do, well, that's the end of financial markets. Forget about it. So it's not going to end. You literally have to understand how it works so you can take advantage of it. That's all. That's all it's about. It's nothing else. Okay. You can scream at the cloud all you want, like that old man, but it's not going to change what is an expanding money supply, infinitely expanding universe. Okay. It's just everything expands this universe. Even the whole universe is expanding. Are we living in a shrinking universe? No. Do we live in an expanding universe? Yes. Does that mean things are going to go shrinking in the long term? No. So if you're one of those people who think that we're going to have a massive collapse, all that stuff, well, the Great Depression was a massive collapse, and that even bounced back harder than ever. But we're in a different phase now where things are ramping up like you would never believe it. So yeah. So if you either want to be a part of it or you want to just, be the angry man waving his fist at the cloud, or you could just literally just understand what's going on and go for the ride, right? Turn your XLM into a profit, move it into USDC. When it's done, when the E wave's done, move it back into XLM. Simple process, right? But it sounds simple, but as you know, these waves can take on different forms, different variations, expanding, but we're using a myriad of charts here to guide us. So do I feel lost at all? No. I don't care if a tidal wave hits me, I'm still going to know where I'm going. Would you suggest a percentage to take off your coins as a profit at the end of wave D, or take all and wait? Okay, so I'm not a financial advisor, but what I would do is I would happily take everything off. Okay. At a certain point, when I see visual confirmation across many charts, including bond yield, US dollar, the euro, which is the inverse, Bitcoin, XLM, stock market. When I see all these things produce a pretty complete pattern or thereabouts, I'm out. I'm out. I don't care what anyone says. I don't care how bullish you think you are. This thing's going to wipe you out once the US dollar gets strong for its last move up. And then I'll go back in. I told you. I already told you. Welcome back, Connie. Yeah, absolutely. If you're talking about Dan, I'm not sure which penyon you're talking about. Dan, very colorful. But hyperinflation, yeah. Well, that's right. And that's what I've been saying. Like, like you've got to understand that potentially a lot of things are going to collapse and disappear. It could happen, right? You just see this really big red line that goes down into the abyss. That's why I'm out, right? But there's a certain pattern that will occur in all markets, and you just got to keep your eye on the chart when it happens. Keep your eyes glued on Ariaswave live streams and ideas, and even learn it perhaps if you dare to, right? And you'll be able to identify what pattern we're seeing in the E wave. Does it look complete? Does the US dollar looks like it's completed its move, which is a measured move, by the way? We're going to have an idea, right? We're going to have a yardstick to sort of say, look, this is over now. Okay. But the whole point is that we're expecting it. But another layer to that is we're not going to be quick to get out of the market, because where are all the profits made? It's usually toward the top. So how do you count the waves to the top? Well, that's Ariaswave, as I've explained it many times. Okay. So, in a nice little nutshell, that's what I wanted to talk about tonight in Melbourne, right? So I'm trying to give you a bigger picture view, a bigger picture insight, especially if you don't really get what all my ideas have been about. I want you to understand that this is the start of a large 5-wave move up to the upside in cryptos. Massive, massive, massive move up. Hyperinflation will drive cryptos into a different dimension. Forget about the moon, forget about Pluto, forget about the solar system. It's hyperinflation, right? We're talking about hyperdrive warp speed into a different dimension. So it's something that you won't be prepared for unless you know what to expect. Okay. And that's what I try to get across, right? That's the point that I'm been trying to make, but I have to put it plainly because I understand that, you know, just because I understand certain things, it doesn't mean I explain certain things. It doesn't mean you understand them the way that I can see them. But I want to give you the evidence to back it up. I don't want to just go on live saying, oh, this is going to happen, blah, 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 right? Let's be realistic in the short term, and then we'll see it unfold, and then you can make your own decision, right? But you should also learn the waves yourself, so then you don't have to say, oh, I relied on that guy and, you know, it didn't make sense to me, but I followed him anyway. No, that's not the way to go about it, right? Because then you have to say, oh, I gave you financial advice and blah, blah, blah. No, I'm not that person, right? It's up to you to make your own choice, your own decision. But at the same time, understand that it doesn't matter what crypto you're in. This is going to be affecting all cryptos. It's going to be affecting all currencies. It's going to be affecting all global markets. Okay. Don't ask me how much in percentage terms. Don't ask me about that. I just follow the waves. Okay. I can give you some ideas as to where, but don't be saying, oh, what's your target for 2021? I'm just going to say, look, I don't have a crystal ball. Okay. And I'm not a financial advisor. But I will track the waves and say, okay, this looks done now. Let's get out. Or sorry, I will get out. You can get out if you want. It's up to you. But when it's time for me to feel like I got to get out, I'm going to say it. It's just going to be pretty obvious to me because we've seen most of the correction unfold by this point. Okay. And we're seeing what we have more of an idea what the US dollar is doing. So it's always hard at the beginning of a pattern to understand what it's doing. But once you're already basically almost more than 50% of the way through, it's just a matter of you knowing the waves now. So, and it's also pretty awesome that it's likely going to expand because that's where you get your profits. But that's just going to lead to more pain down the road, but that's fine because it's just going to be temporary. It's going to be transitory. Okay. So it's just going to be great. That's all. It's going to be a transfer of wealth. It's going to be transferring from someone else's pocket into yours. And so who cares? That's the zero-sum game. That's the world we live in. So let's just do it. Let's just go for the ride, and you know, I'll be tracking it. So yeah, that's basically it. So hopefully you found that one interesting. As you know, whenever I go quiet, it's because I'm thinking of how to bring content, not only to subscribers, but also to members because they understand it fully, right? I don't need to hide much because it's not that easy to comprehend, but it's also not impossible. So it's just that midway point, which is a sweet spot where when you learn the waves, you get it. If you don't know the waves, it's kind of like, okay, this is potentially possible. But we don't like to deal with potentially possible. We like to deal with logical. Okay. So with that said, I'd like to wrap it up, and hopefully you've enjoyed this one, and I'll definitely be catching you on the next one. So have a good morning, good afternoon, good evening, and good night. Take care.